Hi guys, good morning. Welcome to this Moneycontrol live stream. You're watching IPO Watch with me, Nandita Khemka. Well, the IPO market has been hot, and today we've had 3 issues opening for subscription, and we are focusing in on the much-awaited IPO of online shopping platform Meesho. Now, it has opened up for subscription. It's a 5,420 crore rupee IPO, out of which 4,250 crore will be fresh issue. The company, of course, has seen massive interest via the anchor book. It has already raised over 2,400 crore rupees via the anchor book, which got subscribed 32 times and received bids worth over 80,000 crore rupees. Now, if you look at the key anchor investor, it's SBI Mutual Fund, picked up 25%. Other marquee names include the likes of GIC, BlackRock, Fidelity, Axis Mutual Fund, Birla Mutual Fund. Lots of them, a lot of marquee names actually. But let's understand the post-IPO playbook and future growth roadmap from the company management itself. Joining me now are Sanjeev Kumar, whole-time director and chief technology officer, and Dhiresh Bansal, who's the chief financial officer of the company. Gentlemen, welcome to Moneycontrol. First of all, congratulations for such a successful anchor book allocation. Of course, we are no stranger to Meesho. All of us have placed orders on Meesho at some point or the other. And now it's a question of placing an order for Meesho itself via the IPO. So you've had a spectacular response to the anchor book, over 30 times subscribed. You must be feeling pretty thrilled about the kind of faith investors are showing. Of course, I mentioned some of the names, GIC, Adia, BlackRock, marquee names in the anchor list. Do you see this as a vote of confidence, and what is the feeling like?
Oh, absolutely. I think, we've seen good response from both domestic and foreign investors. And I think one of the, key metric that we had set for ourselves is we wanted like a good depth in the overall anchor book allocation. And we have been able to get over 60 kind of large marquee names kind of participate in the anchor allocation. Hopefully there'll be continued long-term shareholders as well.
Sure. Of course, they have showed faith in your IPO, at least via the anchor book. And of course, we'll get to know how things unfold. Your IPO is open till the 5th of December. But Sanjeev, getting you in the conversation as well. Now, Meesho has been around for almost a decade. It's been quite a journey. Take us through how it all began. What made you feel this was the right moment to actually tap the market and take the IPO plunge? Tell us more about how your journey really has been over the last decade.
Yeah, I think 10 years back when me and Vidit, we started this, I think the insight was very simple. E-commerce was limited to tier one. Mostly people were buying brands, if at all. Most sellers were not able to sell online. And that became a mission that we could always relate to, being from a small town, that we wanted to democratize internet commerce for everyone. Now, fast forward 10 years, we are today the largest platform in terms of annual transacting users, about 234 million annual transacting users, highest number of orders we have done over the last 12 months. We're also fastest growing in our segment. So while we have achieved a lot, I still believe we have a lot more to achieve going forward. If you look at the Indian market itself, it's just so big. We want e-commerce to, we want to take e-commerce to each and every Indian, whether it is in terms of making them our consumers or making them our seller in some form, right? Or making them our logistics partner. So I think there's a lot of headroom to grow. And if you look at the kind of growth that we had in this kind of this financial year, it has been crazy.
Sure. You've kept it really simple, as you said. You wanted to get more sellers to be able to sell online. But there's no heavy seller commissions, no platform fees either, and that's what makes you unique when you compare yourself to your competitors. You've really kept it clean. But post IPO, what's the monetization roadmap looking like? Are there new revenue levers you're looking to explore? Tell us more about how you plan to, how your roadmap would be when it comes to platform fees. Would it continue to remain zero? I mean, are you averse to any platform fees? Dhiresh, I would like you to take this one.
Sure. So first, I'll maybe quickly describe what are the current monetization streams and what is the headroom that we see there. I'll talk about some of the new ones that we're also exploring, and then I'll come to platform fees, the question that you had. So if you look at it today, our 2 revenue streams are related to the various services that we provide to our sellers. So the larger one is logistics related revenue, where We provide our sellers the lowest cost logistics anywhere in the country, and we make a margin in there because our costs are even lower compared to that. The second is advertisement, where whenever a seller wants to grow faster, they can promote their listings on the platform. And that is again a very high margin and very consistently used revenue stream for all of the e-commerce marketplaces that you kind of see globally as well. Today, our ad revenue as a percentage of NMV is roughly one third of where the global benchmarks are. So there is a lot of headroom to grow that stream. It's a pretty new stream for us as well. And typically it scales up non-linearly, right? As you have more and more sellers advertise and compete with each other to get those slots on the platform, the ad revenues grow and kind of there is significant room that we see on the ad revenue stream itself. So both of these revenue streams themselves are today, let's say, not fully tapped. And I think as we have been growing consistently, some of these will also come into play. There are also new revenue streams that we are kind of looking at. For instance, our content commerce business, which is quite new, about 1.5 years old, and has already grown to about 1,200 crores in terms of sales or NMV. That is a very promising new stream where we can monetize potentially more versus what we are doing right now. We're also exploring financial services as one of the key streams of revenue that could potentially get unlocked in the future. And if you see India as the same kind of under penetration that you see in e-commerce, the same exists on the financial services side as well. Most of the 100 million, top 100 million customers are well served, but beyond that, it kind of falls off a cliff. So that's again an area of investment and one which could potentially unlock future revenue streams. Now, coming to platform fees, I think
Sure, we'll
look, we
delve.
charge. Sure.
Go on.
So I was just completing the thought there that look, on platform fees, we have our general philosophy is we don't kind of mislead customers into believing that they're buying a certain product for a certain price and then at checkout kind of change that number. So that's a more philosophical principle. And there is enough room within our existing monetization streams to not like require to kind of add platform fees as a platform.
All right, that sets the record clear. There is enough headroom for revenue stream and no platform fees in the future as well. But Sanjeev, we'll delve deeper into the financials in a bit. Sanjeev, we just want to understand, while your annual transacting users have grown strongly, the average order value has been trending lower. Clearly a volume-driven strategy that you guys follow. How do you balance that focus on affordability with the need to improve unit economics over time?
Well, I think that's the secret sauce of our business, which is as we continue to make our logistics cost kind of lower and lower, right? Like there's the innovation that we have done with Valmo, which is reimagining this entire national logistics network to a completely asset-light manner. And we are also kind of lowest or one of the lowest across different cost headers. For sellers, the cost of doing business is extremely low. Because of all of these, low margin products continue to become viable. So as we continue to optimize each of these cost headers in the business, more low margin products continue to become viable, more low price points continue to become viable, which is where you see our AOVs continue to go down. The latest data that we have shared out is about 266 rupees. And the reason for that is we have continued to kind of optimize this, and you see us becoming a lot more horizontal over time. Home and kitchen is a good category. If you see, like that has grown from 10% of the share to about 19% at a platform level over the last 2 years. So I think that's the business. And to your question of how do we still stay unit economics positive, right? Like the way we have designed this entire thing is irrespective of the AOV, irrespective of the payment method, whether it's COD or online, we make the same contribution margin percentage for every order because we want to build a sustainable business, and that will continue to be the philosophy always going forward as well.
Okay, point taken. Let's delve into the financials then. Dhiresh, we were talking about newer revenue streams and how you guys have been able to maintain a pretty solid clip. I think around 28% CAGR over FY23 to FY25, if I'm not mistaken. Do you are you confident that you can keep that that run rate throughout going forward? And any targets in mind if you look at the next 2 to 3 years?
Sure. Unfortunately, we can't share any forecast like specifically, but qualitatively, I'll give you color around the
Sure,
fact that
ballpark.
you yeah. So I think if you look at the growth rate of the company over the last few years, we have been actually accelerating our growth, both in terms of annual transacting users as well as the overall NMP or sales that kind of happens through the platform. In FY24, our ATU growth was about 14%, which accelerated to about 28% in FY25. For the first half of this fiscal year, that grew by about 34%. And the same trend is replicated then into the NMV of the platform as well, which has also been on an accelerating journey. Now, what we believe is India is kind of still very early in in e-commerce adoption. There are many places like China, Southeast Asia, etc., which have kind of more mature e-commerce markets. And I'm talking right now only about emerging markets, leave alone kind of developed markets, where almost the entire population of smartphone users starts transacting on e-commerce apps. And that's the headroom, for instance, that we are going after because our value proposition of affordability resonates not just with a few million people, but it resonates across the entire population base of the country. So that gives us a good platform. And given what we have built already, we can continue to make things better from here on to keep accruing more new users and also increase their frequency, as Sanjay spoke about, by reducing logistics cost, by bringing in more innovation around the various AI stack that we have. We'll continue to increase the frequency of our existing users as well. And that's essentially the growth formula for the next few years.
Okay, that's what the growth formula looks like. In terms of contribution margins as well, things have improved. I think the first half of FY26 itself, I think it's somewhere around 3.8 or 3.6 if I'm not mistaken. Just want to understand if you guys are working with any ballpark aspiration when it comes to contribution margins as well. EBITDA level, we'll talk about it in just a bit, but in terms of contribution margins as well, any kind of a runway that you're working with?
So I think a lot of change in contribution margin would come from ad revenues improving from where they are, right? Like I had mentioned earlier as well, today the ad revenue as percentage of NMV that we have is roughly one third of what is the global kind of benchmarks where, and I'm only talking about value focused e-commerce players, not even talking about some of the other ones which are even higher. So I think that maybe is a good indication. I can't talk about specific numbers, but on contribution margin itself, there is a lot of headroom to grow.
Okay, a lot of headroom to grow. But then the billion-dollar question or million-dollar question, whatever you call it, the path to profitability on an adjusted EBITDA level, I think there was a loss of 500 crores or thereabouts. And of course, with the massive, spends on, technology, of course, since yours is a technology-driven platform, how long will the wait be, when it comes to profitability? And any timeline you guys have in mind to achieve that?
So we think of our bottom line in the form of free cash flow. Ultimately, the shareholder value, if you look at it, is the net present value of all the future cash flows of the company. And if you look at it on a free cash flow basis, for the last 2 years now, we have been positive free cash flow. Last year, FY25, we generated close to about 1,000 crores of free cash flow. Even as of September, if you look at it for the 12-month trailing period, we generated about 1,000 crores of cash. And that essentially means that we are able to grow without kind of requiring further to dilute shareholders with capital raise, etc. And that's going to be the focus for us going forward as well. That being said, again, with the contribution margin that will continue to improve, as well as when we grow, the fixed cost base kind of does not grow at the same pace, and we'll also have operating leverage coming out of our business. So both of those should lead to improvements on adjusted EBITDA and PAT as well. I don't think we can share a specific timeline, but I think you'll see changes in all three metrics going forward as well.
Okay, that's the thought there. Then, let's talk about, how you guys have set yourself apart from rest of the, players in the market. When we talk e-commerce in India, Sanjeev, it's always Amazon, Flipkart that dominate the conversation. But Meesho itself has managed to carve a niche of its own. What according to you really sets you apart in the way you engage with both sellers as well as customers?
I believe the fundamental difference is always a tech-driven approach, which is we use technology to solve problems. And if you look at the headcount that we have, about 2,000 odd people, much lower than anybody else. 57% of them are techies, right? So I think that has always been the approach. We rely heavily on
Hmm.
AI to kind of drive this entire marketplace. So right from when consumers open the app, the feed is hyper personalized. There also very interesting fact, about 75% of the orders for us is driven by real estates where users don't express their intent clearly themselves. It's an indirect, implicit intent. It's not
Hmm.
search driven, it's more browsing oriented. So we rely heavily on ranking and recommendation algorithms on the consumer side. On the seller side, if you see, like, if you want to truly realize our mission of democratizing internet commerce, we have to just make the platform extremely simple for everybody to use. So on the seller side, we have made listing extremely simple through use
Hmm.
of technology, again, AI to kind of improve the merchandising so that sellers don't have to put all the effort to kind of make it work on our platform, right? Same on the logistics side as well. I want to talk about this very unique technology. For example, if you look at our prospectus, there's this something called Geo India LLM that we have built. That in India, you have like very Indian way of describing
Hmm.
address, especially smaller towns. It's a relative way of describing address. 300-meter from this petrol pump, take a left, and so on. It's not very structured. There are no flat numbers. There are no street names.
Hmm.
So we build a technology again, custom built specifically for this use case to understand this kind of address to
Hmm.
convert it to a location and then which our Valmo network can deliver. So a lot of India's specific innovations, a lot of our innovations specifically for our consumer base, you'll see across entire Meesho. And that will continue to be the approach going forward, which is where we see that, and we have mentioned in the usage of proceeds as well, like we'll continue to invest behind AI and tech to continue to make the platform better for every party in the marketplace.
Hmm. All right, point taken. You will be continuing to invest heavily in AI and tech, of course. So, Dinesh, will this fundraise take care of it? You mentioned that you guys are cash flow positive last couple of years. Would you be plowing back some of that money, with respect to your investments in AI and tech, or would this fundraise be enough? Would it flow through to the books? How is it going to be?
Yeah, we do expect that this fundraise is sufficient. There is, sufficient cash in bank
Hmm.
already that exists, and with this additional fundraise that we are doing as part of the IPO primary, would be sufficient for all of the investments that we foresee for the next few years to come. And at the same time, again, the business would continue to grow and generate more cash. So hopefully that also kind of comes in.
Okay, got your point. Last couple of questions then. Sanjeev, you already mentioned that you guys are looking at deeper penetration in tier 2, tier 3 cities. But are you guys also looking at newer markets, maybe even outside India? Is that a part of the game plan at all?
So we believe there is large enough opportunity in India itself. So if you see, and a good way to understand this is if you look at
Hmm.
emerging markets, usually the user base of chat app,
Hmm.
the most popular chat app out there, tends to be a similar number of users who use e-commerce, value conscious e-commerce business models out there. Like if you look at Shopee, if you look at Taobao, Pinduoduo, and so on, right? So in India, we believe WhatsApp user base is a good benchmark in the long term. Now, basis that today we have reached
Hmm.
only 23 crore users. So there's a large headroom out here in terms of truly realizing our mission of taking e-commerce to everyone in India. Now, if you look at existing user base as well, there also we believe we have a large headroom in terms of transaction frequency. So if you look at FY23 to FY25, in the latest numbers, like our transaction frequency has grown from 7.5, about 7.5 to close to 10 now. So as we continue to optimize and as we continue to innovate on different cost headers, we continue to make lower price points viable. The platform continues to become a lot more lucrative for many use cases that most of the people have, most of the users have on the platform. So I think combine both of this transaction frequency as well as new users, we believe there's a large opportunity in India itself. So there's no reason to go out.
Okay, no reason to go out. Point taken. But are you guys planning to expand into new categories, or the focus will remain on building deeper strength in value e-commerce? Would that be something that you guys will be doing? Because you guys don't have any private labels as such, right? So, is that one area that you guys don't look to tap at all?
Yeah, so I we don't believe that private labels is the right. We have like enough suppliers who are able to just find and manufacture the best products which are more suitable for our consumers. So we and at a price point which is most affordable. So we don't have to get into this business of private labels at all. On the category front, we have continued to become a lot more horizontal over time, right? Like in the beginning, when we started the company, we started mainly with fashion because again, the cost of logistics was pretty high. So it would just not make sense for other categories to kind of put on a platform. But as it has continued to come down, you see, it is a lot more horizontal now. We have fashion, we have home and kitchen, we have baby products, we have plants as well, we have stationery. So a lot of newer products continue to become viable as we continue to optimize the logistics cost, and that will continue to be the focus always.
All right. Last couple of questions as promised. We've seen a GST rate cut happening, in recent past. That of course was or is a big sentiment booster for the e-commerce sector as well. Are you already seeing that reflect in customer behavior on your platform? Either of you can take this. Diresh, if you want to come in on this.
Yeah, I think so. From a GST rate cut perspective, obviously it's been helpful. Having said that, like a lot of the categories and price points at which we sell were already at the lower GST rate slab of about 5%, especially in apparel and some of the other categories. So, the impact has been there. But having said that, on our platform, that was already amongst the lower GST rate slab for most cases.
Okay, got your point. Okay, before I let you go, just want to understand what's that one big risk factor you'll be keeping a close eye on as Meesho enters its next phase of growth. Is there anything that's keeping you up at night in terms of risk to the business? Sanjeev, if you want to come in on this one.
I mean, we have mentioned a few bunch of risk factors in the prospectus, and I believe it's difficult to kind of pick one of them. Maybe we can just kind of call out few of them, Dinesh, if you want to.
Yeah, no, I think the risk factors are well covered in the RHP. I think we keep kind of building our business to mitigate some of those risks, and nothing which kind of keeps us up at the night, thankfully.
Okay, that's good to hear. But in terms of value creation as well, Dhiresh, in terms of ROE, I mean, I was going through your financials. It's been fairly volatile. But in terms of value creation, what can shareholders expect? Any message that you would like to share with your prospective shareholders?
Yeah, I think, look, for the longest time, we have been creating value for all of our ecosystem partners, be it private investors, consumers, sellers, logistics partners, etc. I think we are getting on a journey now where we'll also have a new stakeholder, which is all of our public shareholders. And our endeavor would be to kind of create a good amount of value for them as well over a long horizon of time. And that's what we are hoping to do in the next few years.
All right, point taken. Of course, we will look forward to more interactions as you, make your way towards Dalal Street. Of course, quarterly earnings. I'll hope to see all, both of you all during your quarterly earnings, and we can, of course, talk more about profitability and numbers then. But with that, would like to thank you guys for taking out time and joining in. All the very best. You guys have started on a very, very good note, and I was just looking at some of these subscription figures trickling in, and they look pretty healthy as well. So all the best for the listing, and hope to interact much more often now that you guys are coming to Dalal Street. Thanks a lot for joining in this afternoon. Thank you.
Thanks for having us.
Well, as the management of Meesho, IPO has gone off to a very, very strong start. We saw a very healthy subscription figures for the fundraise figure via the anchor book, and of course the subscription figures that are trickling in are also looking pretty healthy. But with that, it's a wrap on this edition of IPO Watch. Of course, I'll be back with closing bell at 3 p.m. Don't forget to tune in for that. But till then, stay tuned to Moneycontrol for all your other news and updates, and have a great day.